Picture this. You walk into a dealership, the salesman shakes your hand, offers you a bottle of water, and smiles. And then he asks you one question. So, what are you looking to spend each month? And you answer honestly. You say something like, I'm comfortable around 500, maybe 600 a month, right there. That's where you lost. That one sentence just handed the dealer a loaded weapon, pointed straight at your wallet, and the worst part, you had no idea it was even happening. Today, I'm going to show you exactly how that works, and then give you 5 steps that can save you thousands of dollars the next time you buy a car. The trap. Here's the thing dealerships figured out a long time ago. If they can get you focused on the monthly payment instead of the total price, they win. Every time. Think about it. A $35,000 car sounds like a lot of money, but $549 a month. That sounds manageable. Same car, completely different feeling. And that shift from total cost to monthly cost is not an accident. It's the entire strategy. Once they've got you anchored on that monthly number, they can quietly manipulate every other variable in the deal. The price, the interest rate, the loan length, the add-ons, and your brain won't notice because the monthly number still looks fine. There are 2 specific tricks baked into this. Let's break them down. Trick 1, the Four-Square Worksheet. Walk into almost any dealership today, and at some point a salesperson will slide a piece of paper across the table. 4 boxes: trade-in value, vehicle price, down payment, monthly payment. Simple, right? Here's the problem. You're going to look at the top right. Vehicle price. That's logical. That's the number that matters most. But the dealer is laser focused on the bottom right. Monthly payment. Because as long as that number looks okay to you, they can move everything else around. Watch how this plays out with real numbers. Say you're looking at a car listed at $27,000. On a 36-month loan at 6.5% interest, your monthly payment works out to around $828. That's too high. You said you wanted $500 to $600, so the dealer doesn't lower the price. Instead, they stretch the loan to 72 months. Now the payment drops to $463 a month. You're happy. Feels like a win. But the car didn't get cheaper, you just agreed to pay interest for twice as long. On a $27,000 car at 6.5%, 36 months, you pay about $1,800 in total interest. 72 months, you pay almost $3,600. The monthly number went down. The total cost went up by nearly $2,000. That's the worksheet trick. They're not negotiating price. They're negotiating your perception of price. Trick 2, the interest rate markup. This one is sneakier, and honestly, it's been going on for decades. Here's how it works. When you apply for a car loan through a dealership, the bank approves you at a certain rate, let's say 6.5%. That's what your credit score earns you. But the dealer doesn't have to tell you that rate. They can tell you the bank came back at 8%. Pocket the difference, legally. This practice was so widespread that in 2015, the Department of Justice sued Honda over it. Not just for markup, but specifically because minority borrowers were being charged higher markups than everyone else. Honda settled. And the DOJ press release openly described rate markup as standard industry practice. The settlement capped Honda's dealer markup at 1.25% on loans under 60 months. That sounds small. Let's do the math. $27,000 car, 5-year loan. The difference between 6.5% and 8%, at 6.5, you pay about $4,700 in total interest. At 8%, you pay about $5,900. That's $1,200 straight out of your pocket into the dealers. And some dealers push 2, even 2.5 points over your approved rate. The fix. 5 steps. Okay, so now you know the game. Here's how you play it differently. And the whole thing takes maybe 30 minutes of prep before you ever step on the lot. Step 1, know your real budget. Not a monthly payment range, an actual ceiling based on your income. A good rule of thumb is the 24-10 rule. Put at least 20% down, keep the loan to 4 years or less, and make sure your total monthly car costs, payment plus insurance, stay under 10% of your gross monthly income if you make $84,000 a year. That's $7,000 a month. Your car budget, all in, should be $700 or less. If you can't make the numbers work in 4 years, the car is too expensive for you right now. Full stop. Step 2, get pre-approved before you go. This is the single most powerful thing you can do. Go to your bank or credit union, not a dealership, and ask for a pre-approval on a car loan for whatever amount you're targeting. They'll tell you exactly what rate you qualify for. Now you have a benchmark. When the dealer comes back with a financing offer, you can compare it instantly. And if theirs is worse, you say, I already have financing lined up. Thanks. That one sentence changes the entire negotiation. Step 3. Never discuss monthly payments. If the salesperson asks what you want to pay per month, say this: I don't really think about it that way. I focus on the out-the-door price. That's it. You just shut down their entire playbook. If they push, if they try to steer you back to payments, slow everything down. Tell them you need to think about it. Ask them to email you the full breakdown so you can review it at home. You are never in a hurry at a dealership. Time pressure is a sales tool. Don't give it to them. Step 4. Cap your loan at 60 months. The national average loan term right now is pushing 69 to 72 months. Dealers love this because longer loans mean more interest. They also mean you could end up underwater, meaning you owe more than the car is worth for a long stretch of time. 60 months max. Write it down before you go, and don't let them talk you out of it. Step 5. Reject everything in the finance office. You negotiate the car, you sign the paperwork, and then they walk you into a back office to see the finance manager. This is a second sales pitch, and it's where a lot of people get hit. Extended warranties, paint protection, gap insurance, tire and wheel coverage. They bundle all of it in, quote it as a monthly addition so it sounds tiny, and suddenly your loan is $3,000 bigger than the car price you negotiated. Default answer to all of it, no. The one exception worth considering is gap insurance, which covers the difference between what you owe on the loan here's the quick version.
and what the car is
Car
worth
dealers
if it gets
make
totaled.
money by getting
But
you to
even
focus
that,
on
you
monthly
can buy
payments
cheaper
instead
through
of
your
total
regular
cost.
insurance company.
They stretch loans,
Don't
mark up
pay
interest
dealership
rates,
prices for
and
it.
pile on add-ons
Everything
in the
else
back
can
office.
wait.
You can add an
You beat it
extended
by
warranty
doing 30
later if you
minutes of
decide you
homework
want
first.
one.
Know
You
your real
cannot
budget.
unsign a
Get
contract. Get pre-approved. Talk total price, not monthly payment. Keep the loan under 5 years. Say no to the finance office menu. Do all 5 of those things, and you could realistically save $2,000 to $5,000 on a single car purchase. If this was useful, subscribe. Because next week, I'm breaking down whether it actually makes more sense to pay cash for a car or finance it. The answer might surprise you.